Chapter 8, Financial Statement Analysis. In this chapter, we will be learning about financial statement analysis. There are different tools used for analyzing the financial statements. The tool is selected based on the purpose of analysis. Following are the commonly used tools of financial statement analysis, which are comparative statement, common size statements, trend analysis, funds flow analysis, and cash flow analysis. In this chapter, we are going to use only three tools, which are comparative statement, common size statement, and trend analysis. First, let me explain you about the preparation of comparative statement. A comparative statement has 5 columns. As you can see that this is the format of comparative statement. Here, comparative statement is containing of 5 columns. Following are the steps to be followed in preparation of the comparative statement. The column 1 should contain particulars of item of income statements or balance sheet or return. In column 2 and 3, we have to enter the absolute amount of year 1 and 2. In column 4, we have to show the difference in amounts between year 1 and year 2. If there is an increase in year 2, put plus sign, and if there is decrease, put minus sign. In column 5, we have to show the percentage of increase or decrease of the difference amount shown in column 4 by dividing the amount shown in column 4, that is absolute amount of increase or decrease, by column 2, that is the amount of 1 year. As you can see that this is the formula for finding percentage of absolute amount of increase or decrease. Now shall we proceed our chapter with sum number 1. From the following particulars, prepare comparative income statement of Arul Limited. The given particulars are revenue from operations, other income, and expenses. In 2015 to 16, they had a revenue from operations of Rs 50,000, other income of Rs 10,000, and expenses of Rs 40,000. In the year 2016 to 17, they have a revenue from operations of Rs 60,000, other income of Rs 30,000, and expenses of Rs 50,000. This is the format for comparative income statement of Arul Limited for the year ended 31st March 2016 and 31st March 2017. In particulars column, we have to add revenue from operations with other income, which will become as total revenue. With the amount of total revenue, we have to less expenses, which will become as profit before tax. The amount for revenue from operations are 50,000 for 2016 and 60,000 for 2017. And the amount of other income are Rs 10,000 for 2016 and 30,000 for 2017. If we add 50,000 with 10,000 will gives you Rs 60,000. If we add 60,000 with 30,000 will gives you Rs 90,000. So the adjusted amount will become as total revenue. With the amount of total revenue, we have to less expenses, which is Rs 40,000 for 2016 and 50,000 for 2017. If we less 60,000 with 40,000 will gives you Rs 20,000. If we less 90,000 with 50,000 will gives you Rs 40,000. The adjusted amounts will become as profit before tax, as we have calculated row 2 and row 3. In row 4, we have to compare 2016 and 2017 amounts. In 2016, revenue from operation is Rs 50,000, but in 2017, revenue from operation is 60,000. So comparing to the last year, revenue increases up to 10,000. Similarly, in 2016, other income is 10,000, but in 2017, other income is 30,000. Comparing to the previous year, other income is increased with 20,000. Similarly, in 2016, total revenue is 60,000, but in 2017, total revenue is 90,000. Comparing to the previous year, it increases with 30,000. In 2016, expenses is Rs 40,000. In 2017, expenses is Rs 50,000. So comparing to the previous year, it increases with 10,000. In 2016, profit before tax is 20,000. In 2017, profit before tax is rupees 40,000. So, comparing to the previous year, it increases with 20,000. After the calculation of absolute amount, we have to find the percentage for absolute amount. This is the formula for finding percentage. First, we will find the percentage for revenue from operation. The absolute amount of revenue from operation is 10,000 and the year 1 amount is 50,000. Absolute amount is 10,000, year 1 amount is 50,000 and we have to multiply with 100. 4 zeros get cancelled. 1 time is 5, 20 time is 100. So the percentage of revenue from operation is 20%. As the absolute amount is increasing, so percentage will also increases. After finding revenue from operations, now we will find the percentage for other income. Absolute amount of other income is 20,000. Year 1 amount is 10,000. 20,000 by 10,000 into 100. 4 zeros get cancelled. 2 into 100, which is 200. So the percentage of other income is 200. As the absolute amount is increasing, percentage will also increases. Now we will find percentage for total revenue. Absolute amount of total revenue is 30,000. Year 1 amount is 60,000. 30,000 by 60,000 into 100. 4 zeros get cancelled. 1 time is 3, 2 time is 6. Again 1 time is 2, 50 time is 100. So therefore percentage of total revenue is 50. As absolute amount is increasing, so the percentage will also increases. Now we will find the percentage for expenses. Absolute amount of expenses is 10,000. Year 1 amount is 40,000. 10,000 by 40,000 into 100. 4 zeros get cancelled. 1 time is 4, 25 time is 100. So therefore percentage of expenses is 25. As the absolute amount is increasing, so therefore percentage will also increases. Now we will find the percentage for profit before tax. Absolute amount is 20,000. Year 1 amount is 20,000. 20,000 by 20,000 into 100. 20,000 get cancelled. So remaining 100. Therefore percentage for profit before tax is 100. As the absolute amount is increasing, so the percentage will also increases. This is how we will be finding percentage for absolute amount.